For Morningstar, I'm Jeremy Glazer. Many people, including the Federal Reserve, are beginning to get worried that the U.S. economy is slowing down. I'm here with Bob Johnson. He's our Director of Economic Analysis to look at some of the numbers and see if that's really the case. Bob, thanks for joining me.
It's great to be here today.
So are these concerns, including from the Fed, kind of well-founded? Are there signs that the U.S. economy really is slowing from the growth levels that we've seen recently?
Sure. I think everybody came overly optimistic on the economy. I mean, we had certainly a very good June quarter a year ago, but a lot of people said, oh, maybe that's weather. And then things really got strong in the September quarter, and we had close to 5% growth. Somebody said, maybe this is the real deal, and everybody kind of started thinking maybe we'd grow 3.5% in 2015 in terms of GDP. Well, then the fourth quarter came along, and the economy only grew about 2%. We've got one more revision coming, and we'll probably make it closer to 2.5%. But anyway, the economy still slowed by about half in the December quarter, and I think the data that's setting up so far is that the March quarter of 2015 will also be in that 2% range.
So let's look at some of the underlying metrics here that you look at. First is manufacturing, an area that really was a driver of the recovery for some time, but is now showing weakness. What are you seeing there?
Yep. With manufacturing, I think the data is weaker, but as we've warned readers for a long time, we think that rate of slowdown is normal and to be expected, and I still expect it to grow above the long-term average in manufacturing in 2015. But it won't be the banner year that we had in 2014 where they benefited from a lot of oil exploration. It benefited from a really strong auto industry. So certainly, and even still strong exports because the strong dollar hadn't really kicked in yet, and there's a lot of long-term contracts there, and you've got Boeing doing some interesting things. So you roll all that together, it would be really hard to top what happened in 2014, and now with the dollar stronger, and I'm certainly a little bit more worried about the manufacturing sector, and frankly, the data show it. This week we got durable goods orders, and the news there was that they declined 1.4% between January and February. Not a terribly awful number in this volatile series, but that's even excluding airliners, which are the volatile part. We're also still down 1.4%. You exclude defense orders and those aircraft, and you're actually looking at kind of 6 months in a row of decline. So this manufacturing isn't, well, maybe, or gee, with a weather toss number one month or another. This is for real, and I think we're not going to grow as fast manufacturing-wise, and that's kind of in our GDP forecast. And it's one of the reasons our forecasts have generally been lower than most of the street.
Has oil been a big impact there?
It absolutely is, but the hard part of it is that there's no single box in it that says oil. There's so much of and this is durable goods, so it's obviously not the oil itself, but it's the drill bits, the drill for the oil. It's the computers that drive those drills. It's the tubular steel that goes to the site. So almost every category is kind of touched, but you can't add them up and say, oh, well, this is what energy did to it, but it's making everything look a little weaker than it otherwise would.
Looking at housing, there's been some gloomy data there as well.
Yeah, we've had a series of bad news starting last week where we had some poor news on housing starts. The permits looked a little bit better, but we had some bad news on starts. And then we started this week with the bad news on existing home sales, which remained under 5 million units on an annualized basis again, and came in below street expectations. So clearly the housing numbers are off to a bad start. You look at a lot of the numbers, and especially the starts data last week, you could see the slowing was in a lot of the areas that would be affected by weather, and some of the other parts of the country did a little bit better. Kind of interestingly, we've got two counterpoints to that, and why I'm still optimistic about housing for 2015 is that Lennar certainly said they've seen a good spring selling season, and people are particularly interested in lower priced homes. So if builders can build something in that arena, they'll certainly probably do a little bit better. But the new home sales data also out this week was above 500,000 units. Now, this report's often revised, so we got to be a little careful with this. And we've had 2 months in a row with sales over 500,000. And that's only happened, the last time that happened was way back in 2008. So that seems to indicate maybe we get a little bit of improvement. Now, this series is incredibly volatile, but if it were correct, it'd be a better series to have because it includes people buying homes that are already completed sitting on a lot because you don't have to start it, so it's not in starts, or it's one that's on the drawing board but hasn't even been started yet because it's a lot number on a map. And so this tends to be a little bit more comprehensive, but it also is more volatile.
Let's look at inflation then. Obviously, a concern. The Federal Reserve is concerned about not being at their 2% target yet. What do we see from inflation data? What does it say about economic growth?
Yeah, I think you've always got to be careful at looking at a single month of data, but certainly after several months of decline in the CPI inflation rate, we actually had a tick up to 0.2%. So the number did go back up, and everybody's saying, well, maybe we've seen the best of some of the inflation number for a while. If you exclude food and energy on a year-over-year basis, we're up about 1.7%. So inflation is beginning to move back. People are thinking that 2% target. Well, we're not all that far off of it. In fact, I'm actually quite worried about inflation. I think we'll probably be okay for the next couple of years, but as we approach theoretical capacity in the economy, that's going to certainly push inflation up. And certainly rents continue to be an issue. Rents were up about 3.5% year over year, and that's a meaningful part of the index, and I don't see any signs of those abating. And so I'm a little worried that inflation will move higher. In probably a year from now, we're going to be talking inflation of 2 to 2.5%, and not under 2, and not what about deflation.
Taking this all together, how do you think about the strength of the economy? Then it seems like weather, some other issues are kind of impacting in the short term. What are you going to be watching to see if there is a real slowdown, a fundamental slowdown, or if it is just these temporary factors?
Yep. I mean, you certainly have some things shifting around with manufacturing and housing and so forth, and I think the housing betterness later in 2015 will offset the manufacturing part of it. But I don't think we've got this accelerating growth that a lot of people are thinking. And I think we're going to have a pretty steady state economy in 2015 like we did in 2014. What I'll be watching is, obviously, I need housing to get better. We know manufacturing is not going to be so hot, so either manufacturing has to do better than I think, or housing has to kind of kick it into gear. And I'm thinking housing will come back. And I think we've seen some early signs that maybe it will look better. Some of the year-over-year data, some of the new home data looks a little better than some of the other data. And I'm optimistic that we've still got a lot of room to move in that sector. So I think that will be one of the key things that I'm watching. Retail sales have certainly been sloppy lately, and people have said, why aren't people spending their gas money yet? And I think certainly higher utility bills may have hurt that a little bit, and higher food prices. But I think as we move, maybe not in the next month or two, but getting towards June and July, that the retail sales numbers should start to look better, or else then I am a little bit more concerned.
Bob, thanks for the update today.
Thank you.
For Morningstar, I'm Jeremy Glazer. Thanks for watching.